go through a serious pullback. The US dollar index will hardly weaken today, even though new mixed statistics were released today in the United States. Vigorous industrial production for March and sluggish housing construction. The number of issued building permits fell by 4.3% and reached the lowest level since July last year. This is not surprising on the back of the high interest rates. Industrial production in the United States rose in accordance with the forecast by 0.4% in March, and the February figure was also revised upward. By comparison, industrial production in China, the world's second-largest economy, expanded by 4.5% year-on-year in March. That's much lower than the 7% rise in January and February combined, and the market forecast of 5.4%. Retail sales in China also slipped in March to 3.1%. At the same time, forecasts expected to rise to 4.5%. Besides, China's annual GDP growth of 5.3% in the first quarter surpassed expectations. But neither industrial growth nor retail trade met forecasts. New home prices have fallen at the fastest pace in 8 years. There is all the evidence of the decline of the Chinese economy. Amid such fundamentals, the U.S. healthy economy stands out among other major economies, thus propelling the U.S. dollar to new highs of the year. Let's add to this picture the growing anxiety in the Middle East and the flow of assets into the safe haven US currency. Meanwhile, the euro is trading under selling pressure due to the dovish prospects of the ECB's monetary policy. Besides, the pound sterling weakened in light of the unemployment data in the UK. Traders are braced for forex interventions by the Bank of Japan to save the yen, which has slumped to a critical level of 155 against the greenback. It's no wonder that the US dollar is extending its advance against most major currencies for the fifth day in a row. As a result, its index has already recorded a 5-month high against the pound and the euro today. These major currencies are set to depreciate significantly in the coming weeks and months. So, the US dollar's run on a forex is going to last indefinitely, and today the US dollar index maintained its rise within an intraday corridor between 106.07 and 106.44. When it comes to stock indexes, Wall Street was a little confused yesterday. Concerns over interest rates, earnings, and geopolitics sent the S&P 500 index back down by more than 1% on Monday to its lowest level in nearly 2 months. The index is again trading lower today with the high volatility. Now, it's trading within an intraday corridor between 5,045 and 5,067 points. Meanwhile, the US dollar is already heavily overbought. At the same time, the euro is heavily oversold. Such conditions should limit the potential for the movement on the chart. However, the single currency has already weakened to 1.0605, its lowest level since November 2. Since its decline began with the ECB's signal last week of a rate cut in June, nothing has changed in this regard. On the contrary, the timeline for rate cuts in the United States has moved even further on the calendar. Therefore, the euro-dollar is set to remain in the bearish zone and even test the critical support of 1.06. And the intraday corridor for today is seen between 1.0606 and 1.0656. Oddly, the euro-dollar is trying to rise even despite the ultra-soft comments of the ECB President Christine Lagarde. The policymakers said today that the regulator will cut interest rates in the near future unless there are any serious surprises. In the meantime, crude oil is hanging around $90 per barrel. The Brent price follows the pattern of a jumping higher and then falling lower. Oil prices react primarily to all statements relating to the situation in the Middle East. At first glance, geopolitical jitters are calming down, but Tel Aviv declared its readiness to respond to Iran. So the risk of escalation has not gone away. In this context, oil investors simply are puzzled about what to do. Now, confusion keeps the market in balance. Volatility of futures for the benchmark Brent sends the price up and down by 1.5% from the level of 90. You have watched the market review by InstaForex analyst for Tuesday, April 16. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. So see you online tomorrow.